The Jacksonville economy, while improving, is still weak. Occupancy rates are weak. Rent growth levels are weak. And apartment construction is picking up. Welcome to Apartment Market Dynamics from MPF Research. I'm Jay Parsons with your Jacksonville update. There are not a lot of positive vital signs coming out of Jacksonville these days, and yet apartment developers are ramping up their work. Take a look at this chart showing units under construction by quarter, and you can see an incredible surge of construction going on just over the past year. A year ago, only 304 units were underway. Now there are 3,067 units under construction, and that's within 500 units of the Metro's decade peak in ongoing development. So once these new units are built, this will expand Jacksonville's apartment base by 3.4%. That is the 9th fastest rate among the nation's core 50 markets. But to give you some more perspective, look at this top 10 list for inventory growth, and you see some markets from Texas and the Carolinas. Those were markets that rebounded quickly from the recession and weren't really hit that hard during the downturn. Strong economies, good demographics, areas where the for-sale market didn't take a big hit. And then you have some hot growth markets like Denver, San Jose, DC, Nashville, Seattle. And then there's two Florida metros, West Palm Beach. Not a huge surprise there, given that fundamentals were pretty good. But Jacksonville, very surprising to see it this high on the list. Let's show you some underlying data to explain why these construction numbers are a bit surprising. And then we'll try to flip things around and give you a few encouraging signs for why those numbers might not be totally crazy. Occupancy rates among the nation's core 50 markets, Jacksonville has the third worst rate, just 91.5%, tied with Atlanta and ahead of only Memphis and Las Vegas. Now, occupancy is trending up 100 basis points year over year, but obviously still a huge hole to fill. Rent growth levels, year over year, rents in Jacksonville were up just 1.2%. That was the 8th worst performance among the core 50 metros, and it was the weakest in all of Florida, just ahead of Tampa Bay. Now, part of the problem, of course, traces to the local economy. They are still down more than 20,000 jobs over the past 5 years on net in Jacksonville, so lots of room to go. However, we are starting to see some encouraging signs, and this is where we have a little bit of a string of good news that maybe help explain why investors are starting to fund some new development activity in Jacksonville. As of Q1, Jacksonville is up 17,900 jobs year over year. That's the best performance in quite a while. That adds up to a strong growth rate of 3%. Furthermore, the Metro added more jobs in 2012 than were initially reported. Initially, the Bureau of Labor Statistics said there were only 5,400 jobs added in Jacksonville in 2012, but when they revised that data in March, they said that the Metro actually added 13,900 jobs. So that's a significant upward revision. So that's the first positive of seeing some economic momentum, even though there's still a big hole to fill. The second positive for apartment developers is that the vast majority of this construction is in perhaps the only location in Jacksonville that could justify some new development. And that's right around Jacksonville's St. John's Town Center, split between two submarkets, Bay Meadows and Upper South Side. This is the southeast portion of the city. So when you look deep enough, you see occupancy rates in the top end newer product in these submarkets is actually pretty solid. In the 2,000 plus segment of those submarkets, so these are the properties that will be competing with the new supply, occupancy comes in at around 94.5% in both spots. That's substantially better than the Metro average. Now, having said that, we haven't seen consistently good rent growth even in those segments of Bay Meadows and Upper South Side, and it may be quite a while before properties in the 2,000 plus segment in those two submarkets could generate much rent growth at all, given this huge increase in new supply on the way. The other big factor we're hearing about in Jacksonville is that land prices have just gotten really, really high in a lot of the more attractive markets, and so developers looking for better deals are heading to some of the hard-hit markets like Jacksonville, and Jacksonville just happens to be one of the first markets to see this big spike in construction among those hard-hit areas. So given that, and given the better occupancy rates in the segments of the market that are seeing the construction, and given the recent job growth, these construction numbers may not be totally crazy, but they still sure seem very, very aggressive, especially for a market that is already facing some strong headwinds from the rental single-family home market and from the for-sale market. And so this is yet another factor that is likely to keep revenue growth levels in the Jacksonville apartment market at pretty low levels for the next couple of years. And that wraps us up for Jacksonville. So until next time, for MPF Research, thank you for watching Apartment Market Dynamics.
Want more? Go deeper with NPF Research's apartment market reports. From a national level down to individual metros to specific neighborhoods, MPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.